If your business is showing a profit but you're constantly stressed about cash, you're not alone and you're not bad at business. This is one of the most common and least understood problems in SMEs worldwide. Profit and cash are not the same thing, and confusing the two quietly destroys otherwise healthy businesses. In this video, I'll break down 6 concrete reasons why SMEs look profitable on paper but struggle to pay bills in real life, and what's actually happening underneath. Let's start with the first reason. Profit is an accounting concept, cash is a timing reality. Your profit and loss statement records revenue when it's earned, not when the money hits your bank account. If you invoice today but get paid in 30, 60, or 90 days, your P&L shows success while your bank account stays empty. SMEs often grow sales faster than they grow cash because receivables expand quietly in the background. On paper, you're winning. In reality, your money is stuck with customers. The second reason is inventory and work in progress absorbing cash. Many SMEs tie up huge amounts of money in stock, unfinished jobs, or materials waiting to be sold. Accounting treats inventory as an asset, so profit doesn't look affected. But cash is already gone. The faster you grow without inventory discipline, the more cash you lock away on shelves or in half-completed work. This is one of the most common cash traps in manufacturing, trading, construction, and project-based businesses. Third, expenses that don't hit the P&L immediately. Loan repayments, tax advances, owner withdrawals, and capital purchases often don't show up as operating expenses. Your profit looks fine, but cash keeps leaking out every month. SMEs frequently underestimate how much money is leaving the business outside normal expenses. Accounting hides this leakage unless you actively track it. Fourth reason, growth itself consumes cash. Hiring staff, onboarding them, buying equipment, increasing marketing spend, all of this happens before new revenue stabilizes. Profit calculations assume smooth operations. Real businesses are messy. When growth isn't planned with cash buffers, success actually accelerates cash shortages. This is why many SMEs feel poorer after landing bigger clients. The fifth reason is no cash flow forecasting system. Most SMEs react instead of predict. They look at bank balance today, not cash position 60 days from now. Without a rolling cash forecast, founders make decisions blind, approving expenses, offering credit, or committing to projects without seeing the downstream impact. Cash problems rarely appear suddenly. They build quietly over weeks. The sixth and final reason is founder-managed finance instead of financial systems. In many SMEs, the owner is the finance department. Decisions live in memory, spreadsheets are outdated, and nobody owns cash discipline end-to-end. This works at a small scale, but as complexity grows, leaks multiply. Businesses don't run out of profit, they run out of structured financial control. Here's the key takeaway. Cash problems are not a sign of failure. They're a sign of unmanaged growth and missing systems. Profitable SMEs collapse every year because no one designed the business to protect cash flow under pressure. The solution is not more sales, tighter budgeting, or working harder. The solution is visibility, timing control, and decision systems that remove guesswork. So how do you actually fix these 6 cash problems without hiring a finance team or learning accounting? The good news is this: you don't need an MBA, a CFO, or expensive software to regain control. You need a few basic decisions made deliberately and written down. You fix them by putting a few non-negotiable controls in place. Start with budget discipline, so you know how much cash is allowed to leave the business before pressure builds. Add clear expense rules so small decisions stop quietly draining money. And take control of payment timing, so supplier payments happen deliberately, not emotionally or at the last minute. For profit versus cash timing, track when money actually arrives, not just when you invoice. Keep a simple list of unpaid invoices with due dates, update it weekly, and stop approving new expenses without checking it first. For receivables, tighten payment terms before chasing new sales by shortening payment windows, asking for partial advances on larger jobs, and following up invoices on a fixed schedule instead of when you remember. To fix inventory and work-in-progress traps, identify stock or jobs sitting untouched for 30 or 60 days. That's frozen cash. Then slow purchasing, reduce batch sizes, and stop replenishing items that aren't moving. For hidden cash outflows, list everything leaving your bank account that doesn't show up as a normal expense, like loan repayments, owner withdrawals, tax advances, and equipment purchases, because once you see them together, you'll understand why profit never matches your balance. To deal with growth draining cash, pause expansion decisions until you understand their cash impact, and before hiring, buying equipment, or accepting large orders, ask one simple question. How much cash leaves before the revenue comes back? Because growth without cash buffers isn't growth, it's risk. And if finance lives only in your head, that's your biggest vulnerability. So move decisions out of memory and into simple systems, because even a basic weekly cash check, written approval rules, and a rolling 60-day cash view will reduce stress immediately. These 3 controls, expense rules, payable timing, and budget discipline, directly fix the 6 problems you just saw, reducing hidden leakage, protecting cash during growth, and removing pressure from the founder's desk. You can build all of this yourself slowly, through trial and error, or you can shortcut the process using a system already designed for SMEs that are profitable but unstable. Which is exactly why I built the SME Finance Control System, ready-made budgeting templates, expense control SOPs, and accounts payable systems that are simple, practical, and usable without a finance team. So if your business is making money but still feels financially fragile, this is how you bring it back under control, without guessing.